going to be going over the indexes, the weekly charts of them, just how they look in terms of their moving averages, their just how they're moving, which direction it looks like they're going, and three stocks that are reporting this week that I'm keeping an eye on. I will touch on SPY, QQQ, and all that in an IWM in another video, but those are talked about, and there's so much technical analysis out there for them that I'm going to skip that for now. So besides that, I'm going to go over the S&P 500 2023 quarterly projections. So for you can see the chart here that I created pretty much. Well, not pretty much, I did. For the first quarter, PE is looking good, and it's going to drop all the way to quarter four. So, but the earnings is supposed to rise. So net, we it looks like we're just going to trade sideways, like a lot of people have said. So there could be a lot of chop, and this percentage gain loss is calculated from the current close from Friday. And then, if you average these and just kind of do a guesstimate, and then you average these, you get a 6% return, which is, roughly the same as this, and a year end of 4171. So I did a bear case, a base case, and a bull case. So this is just typically when I started in the industry, doing mutual funds and required minimum distributions and new balances, rebalances, and new money buys and all that. The S&P was, known to historically trade at about 17 times PE. So, things have changed now. So, that could be an old precedent, but so for the bear case, I just said, all right, so 15 PE, earnings dropped to 190, which has been talked about, and then that would be about a 27% drop, which I don't think people have talked about this level. So in reality, I think it would be more 17, and that's what people are thinking. So that's the bear cases. Well, what some people's bear case is that we go to 3,200, which would be about an 18% drop from here. And then my base case is that this is most people's base case, is that we go to, we obviously stay around 20 here, and I think we get to, well, I don't know if this is a base case for everybody, but I think we get to 210 in S&P 500 earnings. So maybe 4,200 year end, and that's roughly a 6-7% return, roughly the same as that. And then this is the bull case. This is, say, Russia pulls back from Ukraine, China and Taiwan sign some sort of peace and trade agreement, all nuclear tensions go away, some divisiveness in the U.S. goes away. China reopens, blah, 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 all that. We are probably going to have one of the craziest years ever. I forget which analyst or technician, but they were saying, I believe it was there was a decade where it was really boom or bust. I believe it was the 40s. So I think we had our little bit of a bust period, and now I think we're about to boom again. So, 25 PE on the S&P, 220 earnings, which, some might say is far-fetched, but, that could be pretty big gain. It could be a surprising year. It could be the next roaring 20s. But anyways, onto the indices. So if we just look at the small cap Russell 2000, you will notice that I did put on some new labels here so you can see what indicators I'm looking at, so it's not just a bunch of lines. So RSI is holding around 50. Maybe a little bit of a double bottom here. That looks terrible. And then, as you can see here, the 20-week moving average just bounced off the 200-week moving average, as Carter Braxton Worth would say, to the penny, pretty much. And so that's a good sign. What you got to watch out for here is if this keeps sloping down, but it looks like it's starting to bend up a bit, and the 200-week is moving up. So you want to see the 50-week the 50-week is in blue. You want to see this flatten out and start to curl up, and you want to see the 200-week keep going up, because we have been, obviously trending up, but trading sideways for a while now. But they say the bigger the base, the higher the space. Let's see here. There we go. All right, so Russell looking decent. Just go to the daily because I like to see if there's a cross. So this looks much better. So short-term chart. So weekly chart, you can't really tell much besides the fact that it did break the 200-week moving average. So even though the overall moving averages are staying somewhat intact, the actual underlying, or the indice, broke that level. So hopefully we open above that and close above that this week, because otherwise we'll be in trouble. But daily, curling up here, so that's looking good. Let's go to NASDAQ. So tech stocks weekly, they're about to be in trouble potentially if they don't hold this 200-week moving average in yellow here at about 11,420. So it's got to open above that. Well, it doesn't really have to open above it, but it's at least got to close above it at the end of the week. And then if we go down to the daily, let's see. I just saw this. It got rejected by the 20-week there. Just totally rejected. Daily, can't really decipher much from this. Just a bunch of lower highs and lower lows. The DJI. This actually managed to make a higher high, and the 50-day is curling up like crazy. It's launching, so maybe the blue chips and the the good old 30 Dow stocks are a good place to be. Plus Boeing is starting to come to life. Weekly lost its 100-week moving average. Probably if it regains it, that could be good. 20-week is jetting up. Dow looks pretty good, honestly. And then obviously our favorite, S&P 500. So as you can see, it was in a downtrend that it broke. Overall still lower high, lower high, lower high, blah, blah, blah. It's come to life a bit here. I think I previously posted this or shared that another analyst shared this, that the previous two bear markets ended with two positive months in a row. So, if we can have quite the turnaround here, we could be done with this bear market. So, as you can see, these levels are important. So the 20-week basically held. So this 39.31's got to hold, because then we're dropping down to 36.50. Personally, I'm actually bearish. Bullish. I'm bullish. I think that CPI is going to come in as expected, so maybe market will just be volatile and then kind of choppy, maybe trade sideways a bit and then end the day probably nearly unchanged. But on Fed Day, I think there's going to be some sort of surprise, and I think the market's going to like it. But you know how Fed days go. There's also the vice versa of it, where the market hates it and then everything crashes. So instead of side note, instead of covering the main stuff, I think I already introed this. I'm going to go over some earnings this week that I'm interested in. So one of them is Coupa Software. So they have no PE, which obviously is not ideal right now. But the reason why it kind of caught my radar is the fact that they've been beating like crazy. So the past 3 quarters, they beat earnings on an average of 146.3%, revenue by an average of 3.4%. So they're growing. So Q4 the expected earnings 0.1, revenue estimate about 200 million, a little over 200 million. So we'll see how that goes, and it kind of looks like it's flagging a bit here, with the 20-day curling up and the 100-day holding it up. So that could be interesting. And tech has been battered really. I don't know if I did. Oh yeah, all-time high VWAP's way up there. Lennar. So Coupa reports. I think. Let's see. Monday after the bell. Let's go Weber first, actually. So Weber interests me because they just ousted, the original CEO or whatever, the CEO departed this day. And at first the market hated it and it gapped down, but then they loved it because, they finally had a good quarter because they missed the prior two, beat on this quarter barely. And then this is kind of what's ugly. Is they're expected to go from over 500 million revenue to just over 200 million revenue. So that's not pretty, but this gap is not pretty. This gap up is not pretty. So it's very possible that this thing just tanks, fills that gap down. But it's also possible that the CEO comes out and announces some sort of I can't really imagine much of a revolutionary plan for a grill company besides maybe extensive cost cutting or investing in robotics or something like that. Something that'll reduce cost and increase margins long term. But that's one thing that could be interesting, but probably going to go down. And then Lennar is a home builder. Weber's Wednesday after the bell, and so is Lennar. Lennar is a home builder, trades at a 5.91 PE. It missed Q1 and Q2. It missed Q1. It beat revenue barely by 0.6%, but it tanked on earnings it missed by 34.9%. And then it beat Q2, and it beat Q3 with an average earnings beat of 8.6%, and an average revenue beat of 61.5%, I believe, if I got that right. So in terms of implied moves for these stocks, Coupa will go back in order here. The implied move is 10%, so let's see both ways. We'll go both ways. Let's see. So 10% this way, bring it up to about 69.50. 10% this way would bring it to, let's see, 56. And the average move is 13.62%, plus or minus. Weber Average move is plus or minus 10.68% versus the previous, Coupa was 13.62%. This is Weber's 10.68%. The implied move is 9.53%. Let's just do that real quick. So to 723 or 661. So not that much of a. I mean, you can make a play there, but I'm not going to personally. Lennar. Let's even turn on the moving average. See how that looks. Yeah, see, this one's looking pretty good. But let's see, the Lennar, the move is supposed to be implied is 5.49, average is 5.11. So really, you can't really expect much from this. I'm guessing it's not going to be pretty though, since home builders are the housing market is not looking too hot right now. So anyways, tried a new format today. Leave in the comments if you have any requests or if there's anything I can do to improve or if the quality's bad or whatnot. All this data here in this chart was sourced from Y Charts. It's a great source. That's all. Have a great night, great day. Happy trading.